Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for, I guess I should tell you the date, for May 1st, 2022. We are just wrapping up the month of April. It's been an exciting month, a lot of movement, a lot of volatility, which is good for us traders. I've got a lot to talk about because we have the FOMC next week, we have the Bank of England, we have a lot of key economic data coming out. So make sure that you're sticking around through the entire show, so this way you can hear all my different ideas. I'm going to talk about them here in a second. And really, I actually have to start off. I have to start off this particular week ahead video talking about some important moves that have happened, not just in currencies. I want to actually take your attention over to. I'm going to talk about the FAANG stocks and where that. Why this is so important, where we're currently at, and how you can express that or potentially express it in the currency market and other markets as well. So let's talk about FAANG. FAANG is obviously the Facebook or Meta, Apple, Amazon, Netflix, and Google's of the world. It's the growth leadership stocks, and we are breaking down. I mean, I'm showing you a daily chart of the FAANG stocks, and notice at the end of the week we closed near the lows, obviously because of the Apple and Amazon earnings. Amazon got absolutely crushed, and that has taken this index down quite substantially, and we're closed on basically the lows. And I'm gonna actually show you ARK Innovations, which is Kathy Wood's ETF. It's completing a we've been watching this pennant formation that we're actually completing with divergent relative strength. Now, I'm not going to tell you right now that these stocks are going to bottom, because if you look at the S&P, just throwing the broad market out there, most of you kind of know that look that I've given you with that head and shoulder pattern. We're basically attacking the lows right now, and obviously when we're attacking the lows, or I should say the neckline, trend lows and neckline, there could be a lot of shenanigans, especially starting the month with the equity markets. And with the dollar index as strong as it is, the bigger recipient in all of this and how you can express it is long dollars. Everybody will look for the dollar index to rally as a safe haven currency. If you are a viewer of the Traders Summit interviews, which I do, many of them throughout the course of the week. One of the interviews that I did just last week or the week before last was Brent Johnson from Santiago Capital, and he calls it the milkshakes theory. As currency traders, and I should probably show you that link to that interview. But as currency traders, we always know that when when there's risk aversion, the dollar tends to be the beneficiary. I'm a big believer when there's a liquidity issue and people just want to go to cash, they're going to go to the dollar. They don't care about any other currency but dollars. But it's kind of like this feedback loop that comes through the market, where the dollar continues to rally and it starts to accelerate. Now, it's usually a near-term phenomenon, but that doesn't mean we're not in it right now. And that's the thing that you have to be respectful of, is that stocks are actually at their lows. They can break down from current levels, and if they continue to break down, the dollar is going to be the recipient. I don't try to trade the dollar on a day in, day out correlation that if stocks are down, the dollar is automatically going to be the recipient of a bid. That doesn't necessarily happen. But when things start to accelerate lower and there is quote unquote fear in the markets, that's when people start to rush to the dollar. And like I said, it's a temporary near-term phenomenon, but we might be in it right now, and the dollar may have further to go. Even as overbought as the dollar is, it could become more overbought, obviously. So I want you just to keep a real close eye on what's happening in tech stocks, what's happening in FAANG, and you can just look at the FAANG CFD. I think this is offered by TradingView. As long as we stay below this 4,300 in FAANG, that's going to keep the downside pressure on equities, which is going to be a natural bid for the dollar. One of the other things, since we're on the conversation of risk on, risk off, if you will, milkshake theory, no milkshake theory, one of the currencies or cryptos that's really getting hit is Bitcoin. And I actually liquidated my Bitcoin holdings this week, and I bought it around 40,000. I got out of it around 40,000, and that's fine with me. But the one thing that I have to point out about Bitcoin currently is that it's hovering near some pretty important lows. A lot of traders and a lot of analysts have been pointing towards 20,000 as being a major level for Bitcoin or crypto in recent like 6 months. A lot of people have been just pointing to the fact that we're going to reach there at some point. I don't know if we're going to reach all the way for 20,000, but I will tell you this: Bitcoin has been trading extremely heavy. It's trading well below the 200-day moving average. And even as stocks got that most recent bounce in the S&P, which you can go back and look at the S&P and what happened over this last month, right? Where we bounced and then we came down, Bitcoin barely even responded. So as a result, the risk that we see here in Bitcoin is that we could slide even further towards channel support, which is around 35,000. If that does break, will we reach all the way for 20,000? I think everybody's trying to buy it there, so we'll probably end up falling short of it. But if Bitcoin breaks down through, that 35,000 level, we could see below 30, maybe even into the high 20s in the future. And that's something that I think that if you are long cryptos, you have to keep that in mind, especially with Mr. Saylor and his position in Bitcoin. I forget where his average is, but it's probably around that 30K level. You start getting below those levels, and you're going to start to see more panic in not only the Bitcoin market, but in cryptos in general. But Bitcoin is obviously the one that we follow, especially from a risk off, risk on type of standpoint. Now, what I want to do is I want to take this moment to just talk about currencies. But before I do that, let me just mention a few things about the sponsor of this video. Happens to be ForexAnalytix. So if you guys haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. Try it out, but if you really want to try to access ForexAnalytix and get the premium version, you can also go into the trader funding program. We've had a lot of traders over the last 2 months that we've offered this program get actually access to live trading accounts and bigger amounts of money. You do have to take in an assessment. We do take in an assessment fee, a one-time fee, and then you trade a demo environment. And once you make 10% without risking more than 5% maximum trailing drawdown, then you can access these larger amounts in real money and keep 75% of the profits. It's a really great program for those people that don't want to invest their own money, or maybe just don't have access to larger amounts of capital. So if you want to learn more about it, scroll down to the bottom of Trader Funding Program, and you can see a quick 2-minute video of what it is. I highly recommend that you check it out, because you'll actually get ForexAnalytix as an addition, because why not be involved in ForexAnalytix, be involved in our chat rooms. By the way, to get to the chat room, you go right here, and you can see in the chat room, there's a lot of activity. If you just go into the general chat room and you want to see, this is Friday afternoon, so things are a little slow, but you can see all the conversations that take place and all the charts that we post up, and everybody, what they're doing, what the trades are taking, news and research, macro chat room, we call Flowonomics. There's a lot of great content here, and just realize that when you're trading out there and you're going through an assessment, or you're just trading in general, having a community of traders that don't talk about politics, don't talk about religion, you're not getting sold any other products, you're just in a community talking with other traders about what positions you happen to be in or out of, and all like-minded people. That's a huge benefit for all of us. All right, so check it out. All right, let's talk about currencies, because this week is going to be a big week. I'm going to take you back over to the dollar index. We have the Fed on Wednesday. It's FOMC. The market is expecting for the Fed to raise rates a 0.5 basis point. And I know there's been talk that there might be more, like a three-quarter percent hike. I personally don't feel that's the case this meeting, because I don't think there's been enough communication to prepare the markets for that. You've had your random hawkish FOMC members really talk about it, but until you start hearing the whole chorus sing about it, chorus meaning all the Fed governors, I think it's not really the case. But what it's setting up for, because there's so many hawkish Fed members, is that we might have what we call a hawkish hike. And if that is the case, especially in the current environment when stocks are really under pressure, that's where we have to be very careful with the US dollar going into this next week. If it's a hike, but the Fed and Jerome Powell seem a little bit more hesitant about being too hawkish in the future, stocks are going to respond to that. And knowing that the stock market is at that very, very critical level, and looking at the dollar index, guys, we are above the post-COVID spike down highs. We are above that level right now. And that level came in at basically at 103. We closed the week and the monthly candle above 103. That doesn't mean we can't dip back down below it and break back down and do a false breakout. We can do that, but just realize that the wind is in the dollar's back right now. The next high is going to be that 2017 high, and that's not that far away. We've probed above it this week. We didn't close above it. So, a lot of key levels of resistance as we head into the FOMC on Wednesday. But they're not the only central bank in town, folks. We also have the Bank of England. And the Bank of England is really, dealing with, high inflation, everything else that we're all dealing with. It's supply issues, though, high energy costs. I mean, the Bank of England is in quite a quagmire, if you will, at this moment. But realize that we've gone pretty far, pretty fast. And the one thing that I do want to point out with like the sterling here, let's just take a real quick look. Let me clone that really quick. You can see, we basically completed an AB equals CD, or you look at these moves and they tend to be extended down at these, these levels. When you get this far down in the sterling, no matter what leg you're looking at, you tend to get a little oversold. That's not saying that we can't be more oversold. That just means that there's probably going to be a lot of buyers around these levels. And if you didn't know it already, I'll just show this to you, that if you take the COVID spike low, post-COVID spike low, and let me change my my fib levels, because I knew this by heart, but I didn't have the correct fib up there. It's a 618 retracement. We basically held it. It's at 125. So it shows you really how important the 125 level is to the market. We're going to be jockeying around here going into this week. So if you think about like a rubber band, the rubber band's getting a little too stretched. I used to do, back when I did live events back in the early 2000s, I would actually, when I'd be sitting in a room full of traders, I would actually put a rubber band between my two fingers and I'd pull it. And I'd say, this is a rubber band. You're stretching it a little too far where the tension is so high that it snaps back. We call it the rubber band theory. It's the same thing. When the market gets a little too overstretched in one direction, you tend to get a reversion to the mean a little bit, and that rubber band tension snaps back. And that's basically what's happening right now in the sterling. That doesn't mean that we can't resume the downtrend. That just means that these levels around this 125, you're probably going to get, a plethora of buyers and sellers on both sides of the market, stabilizing the market ahead of that key important data this week. But that's not the only game in town, folks. When you're talking about, the central banks, you also have the RBA that's actually meeting Tuesday morning, I should say, Tuesday morning if you're in Australia or in Asia. It's Monday night if you live in the US. Or in Europe or in Canada or wherever you might be here in North America. But the fact of the matter is, we have the Aussie dollar that is approaching some very, very critical levels of support around the 70-cent level. I personally think that the Aussie is at risk of a continuation move lower. Now, I know a lot of people are pricing in, as far as the RBA goes, they might actually move up rates. Not by a quarter basis point. I believe it's going to be by 0.15 or 0.40 because they're at 0.10 right now. So they're going to move it up to a quarter or half a basis point. Now, there are risks associated with the Aussie, and it's not just, is the RBA dealing with inflation? One thing that they're dealing with that is right their neighbor next door, and also happens to be, one of their biggest trading partners, if not their biggest trading partner, is China. And China is obviously, growth is really slowing. Now, China is doing initiatives to try to support their economy, but who's in the crosshair or who's in the path, in the wake of China, is Australia. So they have to be sensitive to not only what's happening in, around the globe, but also around the world's, second largest. Are they the world's largest now economy? Their second largest economy. You have to worry about what's happening in China. Let's just put it that way. So with that being said, you can see that the Aussie clearly, here's this blue line right here, that horizontal trend line. We are clearly holding resistance. We had tried multiple times this last week to spike above 71.65, and we held below, and at the end of the week we closed on the lows. If you get a rate hike from Australia, from the RBA, and it is a dovish hike, meaning that they want to front load rate hikes right now to fight current inflationary pressures that they may be feeling, but you get a dovish statement, dovish commentary following that, the Aussie may have further to go. I'm looking at the Aussie personally as being a long candidate, but not right now. Obviously things can happen over the course of this week that tell me I need to be a buyer down here, and we might actually end up holding, these levels. Sure, that can happen. And the great news is, if you are a trader and you want to get my updated views and my team, now when I say my team, guys, I'm talking about our team. If you want to hear updated views of the market and you want to hear from our team throughout the course of the week, go listen to the free FACE webinars. You can find it right on our website. We broadcast every single day, and I'll update you along with the team what our feelings are that day, and it's free. It's called the FACE webinar. It's right here. Register right here. Click there and you can attend. It's a Zoom meeting, and you guys have a seat for you. And you can watch via YouTube if you want, whatever. But be there, because things can change. Obviously, I'm giving you my views on a weekend, but between today, the day that I'm filming, and next weekend, a lot can change. So if you want our current views, make sure you listen to those free FACE webinars. Now, going back to the Aussie dollar, based on what the RBA says, the fact is the Aussie is going to bounce from these levels, which is obviously very key support, or we're going to break down towards the 127% extension down at really around 68 cents. I've been planning on buying the Aussie below 70 cents since last December, maybe November. That has been the trade that I've been really focused on since the end of last year. We might be getting our opportunity after this week, especially with the way that stocks are trading and with the RBA and other central banks that are creating these interest rate differentials. So it's really important that you watch the Aussie dollar this week. I am short Aussie dollars currently right now, but not the Aussie dollar itself. I happen to be short some cross rates, short the Aussie, long other currencies. And if you're in the ForexAnalytix community, you already know what I'm doing. But because we put it in our trades room, and you can actually see positions that I'm in, okay? But the fact of the matter is, whoops, I'm on the wrong screen here. The fact of the matter is, there we go, is that that I am looking for lower prices in the Aussie, but that doesn't mean we're going to get it. It's just kind of, I've planned this out for several months, and if we get it, guess what? I'm going to be there. That doesn't guarantee that I'm going to be buying it at 69 cents or 68 cents. I know it's hot on my radar. It's not on my back burner anymore. It's on my front burner, and I'm cooking it. I don't know if that even made any sense to you guys, but whatever. All right, another central bank that's meeting. Oh, did we talk about the sterling? We did talk about the sterling. Okay, and then let's talk about other data that's coming out this week. We have out of New Zealand. Now look at the Kiwi, by the way. Kiwi is approaching some very, very, very critical support. We have employment data coming out of New Zealand, okay? And if you look at the Kiwi has broken down. Now, if the Aussie is going to follow the way of the Kiwi, well, you know, the Kiwi looks like we're going to 74 cents. And if you've been listening to the daily webinars, or if you've been listening to the Morning Edge webinar, which is exclusive to ForexAnalytix subscribers, everybody knows that I've been targeting down here at the 127% extension and this trend line, you know, this whole week. So here we are. Now, if you think that isn't enough and there's nothing else that we can do, there is. At the end of the week, not only do we have US data, employment data, but we also have Canadian data. And do you know what? I have not been focused on economic data, well, on the non-farm payroll over the course of the last several months. If you guys have been listening to these week ahead videos, you guys know I've been all about inflation, inflation, inflation. Guess what? It's time to shift gears. I warned you months ago that there will be a time where we shift gears and we start looking at employment data. Now's the time. Why is it? Well, I don't know if you guys caught it, but we still have high inflation and we have GDP that's now starting to show negative growth. So guess what? There's a pillar of strength that we really need to focus on right now, and that's jobs. We've been at, you know, you call it full employment, right? Unemployment rates at what? 3.5%, somewhere in that neighborhood. We continue to create jobs. The job market's good. We have high inflation, but the saving grace in the US economy right now is that we have jobs and they're plentiful for now. And that's why it's important that we watch this data. So is non-farm going to matter anymore? Once again, yes, let's make non-farm payroll great again. So I think that we need to be focused on that data, and that's obviously going to have some influence when you're talking about gold, because I think gold is coming into some very, very key support around the 200-day moving average here. And I think that you know, we could very easily be testing that level later on this week following the jobs report on Friday. So do we have a jam-packed week of data? Yes, we do. We have central banks up the yin-yang. We have economic data that's going to matter. Shoot, I didn't even talk about some of the other economic data that's coming out this week. We have ISM data out of the US. Again, central banks up there, you know, yin-yang. Okay. We have employment data, and we have PMIs out of Canada at the end of the week. So there's going to be a lot going on. And the best place to be to navigate through this all is here at the ForexAnalytix community. So make sure you get involved via the trader funding program. You take a trial of ForexAnalytix for $1 for 10 days. Download the mobile app. Do all the things. Put forth the effort, because we'll put forth the effort towards you. All right, guys and gals, my name is Blake Morrow. I hope you really enjoyed this, and if you have, please give me a thumbs up. Subscribe to the channel below. I'll catch you all on Monday morning on the free F.A.C.E webinar. See you then. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.